So you're considering making an investment in a multifamily property in an apartment complex, are you? You've realized the benefits that are in this asset class compared to other asset classes. For example, the control you have over an apartment complex compared to the control you have over a mutual fund, and the level of returns that you get and the diversity that you get in your portfolio having real estate along with other assets. Hi, I'm Harlan Merriam. I'm with Attune Investments. We serve people with good, safe, affordable, clean housing, which is a basic need that people have. And we also serve investors like you who would like to be a passive investor, investing some of your resources to get a reasonable return on your investments while making an impact in your communities. My partner, Mike Jacobson, last week shared those 5 benefits of multifamily investments. The first one there was the I in ideal, the ideal investment. The I is for income, the net operating income that you get. This is a business. We're receiving rents. We receive that income. We have expenses, and there's a net operating income that this business creates for you and as an investment. The D in ideal that he described last week was depreciation. It's a tax benefit that is for those of us that are invested in real estate. You don't get tax benefits for being invested in mutual funds. The E was for equity. This grows the equity over time in real estate. It has consistently grown over time, and you can increase the amount of your investment as the equity builds. The A is for the paying off of the loan, the amortization of the loan. Every loan payment that we make has some interest in it and has some principal in it, and you get a benefit of the increase in the value of the property with that amortization of the loan, and the leverage of that loan allows you to multiply the effect of your investment. Those are 5 of the benefits of being in an apartment complex in real estate. I want to talk about another benefit today, and that is the stability of the value of this investment. You know, values go up and down. If you were around during the 2008 depression, that housing bubble that hit there, you watched housing prices go way up and then they fell way back down again. You watched the stock market go up and it fell down again. You've watched that over time, and it's scary when they take those big dives, aren't they? You remember Mike's story from last week when he and his wife were on their way back from vacation, and she looked and found out that her stocks had gone down 30% in one day? That is scary. Ouch. There's one asset class, though, that does not have that volatility in it that many others do. It's a sanctuary for our investments. Historically, it has a much better consistency of its valuation. You can sleep better at night with this investment. A Nobel Prize-winning mathematician, William Sharpe, developed a formula for considering this volatility of your investment returns, how far they go up and down while they're generating that return for you. It's a performance relative to volatility. It's called the Sharpe ratio. Bonds and stocks and gold and apartments all have a return on them, but there are different volatilities to them. Multifamily properties have 3 to 4 times less volatility. The Sharpe ratio shows this than other investment classes. What does this mean? You take 2 different investments, your stocks or your gold or whatever else you have in your portfolio, and you measure not only the return over time, but how big the swings are while it's getting that return. In apartments, back in 2008, they had some swings in them, but they were minor swings as they increased in value compared to the other investments. Why? Because apartments provide a basic need for people. A place to live. If you want less volatility, that is, if you want less scary investments, take a look at apartments. That's one of the reasons Mike and I are invested, is they have a lot less volatility to them. Back in the last several years here in our 128 unit apartment complex, even though COVID hit and the stock market went up and down, and even though interest rates went up and single family houses went up in value during that time, ours went up as well, but it has not had the swings that the other classes do. To serve your need as an investment, find a steady growth in that investment. As a passive investor in a multifamily product, which is usually a 3 to 5 to 7 year investment, look for one that has growth, but not those wild swings in it. You get an excellent return with apartment complexes without the volatility. It's kind of like set it and forget it. When making an investment, learn about volatility and study the differences in different asset classes and their volatility. And you will find, as we have found, that commercial multifamily properties are less volatile, have a higher Sharpe ratio, are more steady. Isn't that what you want?